Good morning, traders. Welcome to the StockCast. My name is Todd Derby, along with my co-host, James Mason, where every day we try to bring you some insights and ideas to help you be more successful in your daily trading. Good morning, James. How are you?
Todd, good morning. I am doing well. How are you today?
I'm doing well. I'm a little red today, feeling a little red in my portfolio.
Yeah. I honestly, I thought for sure. I wasn't caught long or anything. I actually, besides SDC and obviously predictive oncology, I pretty much took profits and everything. Also, BNKD. BNKD I'm using as a hedge in my portfolio, and it's actually starting to do its work. So, yeah, I was not expecting a macro event from China. China is crapping the bed. Their real estate market is taking a major hit, and it's just going to cause a domino effect that is going to be the beginning of a very significant pullback. I'm talking, in my opinion, like a 2008 pullback. So we will see.
Well, the nice thing about a lot of the stuff that we look at and we work with is whether it's red or green market, we have ideas that are going to help us daily trade. We just we're gonna work with what the market gives us, and that's our job as daily traders.
That's the only thing you can do. I mean, it's like we said before. You can do all the charting you want. You can scale in perfectly, but you cannot predict a macro event. Just the way it is. Like the last significant pullback right at the pandemic. I mean, we were just talking about it again, pre-market. How I was saying where I was caught in that one. I was long in Chevron at 100 contracts, call contracts. I was up 80% in profit on a Friday. That Monday morning, them contracts were worthless.
I remember that. That was you were sitting good profits, and that was a good lesson because there was nothing that was completely out of your control or our control, and it just happened.
Yeah, literally, you can't do anything about it. It sucks, especially if you're holding options. It sucks. So let me just go ahead and start sharing charts. I did have a plan to talk about SDC at first, but actually let's talk about just the market in general first.
Well, real quick, let's thank Jonathan, $5 tip. Appreciate it. Follow his lead there. Smash the like button. Curtis James, thank you. Appreciate your efforts there. And then Robert Schwartz. We appreciate the tip and what you guys being part of our membership. And make sure to hit the like button. Help build our audience. All right, James, go ahead.
All right, appreciate it. All right, so let me share my screen. All right, so this is the S&P 500 futures, and this is the 5-minute chart. We can obviously see this downtrend. Looks horrible. Wrong button. All right, here's the daily chart of all my lines. Let me take some of them off because it looks horrible. That'd be okay. All right, so here's my normal Bollinger Band lines. The white line is the 9 EMA. Now I went ahead and you guys haven't seen this line before, but I threw up this pink line that is a 50 EMA. There's no sense having my 200 EMA up yet, but I just want to show you this. So I was expecting the market to actually bounce on Friday right off that 50 EMA with how it was holding up. And that was predominantly going off of the Dow futures. And I was expecting the Dow futures to actually bounce at 34,400. And after hours on Friday, the selling off just continued. But it wasn't too bad then. Obviously, it's horrible now. It still had a chance after hours on Friday to bounce off that range, pull back up. And I was still expecting that. But at that point, after hours was already closed and there was just nothing you could do. But it didn't bounce. And here's where we are right now. So it looks horrible, but let's go back to the chart at the beginning of the pandemic. All right, so here we are. So we're basically seeing something like this. And based off of the candlesticks that I just showed you, I was actually expecting it to break right in here, consolidate, bounce up, come back up, test that middle Bollinger Band line, get rejected, and then come down and do something like this. So basically this little like grouping right here, I was expecting that to actually kind of happen. And then we sell off midterm this week, somewhere around there. But it didn't happen. So where we have to be careful in either direction at this point is, are we at the point to where we're going to actually catch the bounce right here? So meaning like if you try to go short, you're going to end up upside down with like your put contracts or whatever you're trying to do to short the market. And then probably by the time you get to the end of this week, because it's bouncing, you're just like, made a horrible trade. And so you cut those short positions for a loss, and then you go long, and then you just get smoked. And this is always the confusing part when you have the entire market that just goes parabolic in either direction, because at some point it's going to have a slight pullback before it usually continues that momentum. So really the only way I can say to probably best mitigate this situation is you guys have to have super small positions, especially if you don't have large accounts, because this transition, this is where a lot of people, especially with small accounts, are going to blow them up like crazy. You're going to have a lot of people screaming, buy the dip, and they're going to have to buy the dippy dip. This is the dippy dip. So this would be all the people trying to buy the dip, and this is them trying to buy the dippy dip right here. And you can see how that turned out. Now, I know people would be like, but James, we ended up creating all-time highs after that. Yeah. Don't even say that. You're stupid if you do. It's like, if I had to explain the entire stock market from this point on out and what had happened, never mind. I'm not even going on. I'll start rating them. But anyways, so really the only way to mitigate this situation is just to have a super small position size if you just even want to have money market. Me personally, for my swing trades, I'm overall bearish on everything. It's just the way it is. For the simple fact of when the entire market's pulling down from a macro event, it's going to pull pretty much everything down unless if they have a catalyst. Now, going into catalyst plays, predictive oncology is a catalyst play. I 100% expect that to pull back for the sole fact that everybody's going to freak out and panic sell. It is what it is. I mean, if people are panic selling, we can't stop that. You just have to make the decision on what you want to do with your trade. I'm holding. And if it does sell off, I do plan to accumulate more in the 80s, in the 80-cent range. But I'll cross that bridge when I get to it. But for the overall market, we just got to watch out. Are we to the point to where, like, did I miscalculate that bounce? Well, obviously I wasn't right on Friday. But at the same time, I didn't know there was going to be a macro event. And if I did, I would probably made $1 million over the weekend. But obviously I didn't. So what I need to see is, before I decide to swing again, I need to see a bounce in the market like this and then get that rejection. And then I'm going to load up on puts. Probably load up on puts in AMD or Apple and then just write it down. Now, after we have a significant sell-off overall, this setup right here, go to your charts for the S&P 500, the Dow futures, it don't matter because it's all pretty much the same looking. What we'll need to see in the future Whose baby is this? But anyways, what I like to see in the future, to help me understand like where a potential bottom is actually when it starts trending sideways like this, but that non-EMA crossing that middle Bollinger Band line just like that. And then the next thing we would have to look for is that non-EMA crossing that 50 EMA. Now, let me throw on the 200 EMA right here. This is what we look like with the 200 EMA. So, yeah, so let's go back to where we're at right now. So here's our 200 EMA. Now, for the S&P 500 futures right here, we do have support right down here at 42.47. So we'll just have to see what it's going to do. If it's going to trend down a little bit more, bounce right here, come up, but then get rejected and come back down. I do kind of expect it to get a little support off that 200 EMA. But if we get to that point, I'll just review this again and kind of see where we're at economically with the macro events and whatnot. So let's talk about ticker SDC really quickly. We're about 6 minutes from the bell. All right, so SDC is in the beginning of a short squeeze, but again, the entire pullback in the market is going to cause straight fear in everyone. So what I'm going to see here, I mean, we can already see this squeeze happening. Like all this pre-market bond right here. These are either accounts blowing up or just the shorts covered. Like these are actual institutions because that's so freaking early in the morning that retail wasn't even available to trade yet. So right here, we probably do have some shorts coming in trying to hit it, but at the same time, people taking profits, which I get it. There's nothing wrong with that. What we need to see is if we're going to get a bounce here, if this is going to hold up, because if we get a bounce here and it starts going up, then I'm going to be looking to take profits. It's nowhere near my profit targets by any means whatsoever. But the market is taking a crap on itself. And again, that's going to set panic into everything. And that panic is going to help out anybody who's shorting. So that is what I see for SDC and how I'm going to handle that.
So SDC has come down quite a bit from its pre-market high. And I think if anyone has options on it, they're going to – it hasn't really bounced. It had one little bounce, and then it came back down. I think people are going to be like, you know what, I'm going to take my profits because they're holding options. So the shorts might get bailed out here with the red market.
Yeah, that's honestly what I think is going to happen. I think they're just getting freaking lucky. Like, I mean, because we can see it. It was happening right here. But with that macro news, I'm not going to lie. Like, I mean, it doesn't have me shook or anything because my profit margins are so nice on this one. But for the people who just got in, say on Friday, I can't blame them for taking profits. Can't.
Yeah, or at least covering their initial investment, their initial number, so they guarantee, and then maybe there's a small dip, and then the squeeze happens again. So it could get. I mean, after the initial cover, there could be a squeeze put on, and then we could get to that target range of over $10, $11.
Yeah, I have a hard time seeing it hitting my target prices now. My target price was between 12 to 15. Yeah, with this market pullback, I just don't see it. And I could be wrong. I could be 100% wrong here. But me personally, based off of what I'm looking at right now on my chart at this moment, I don't see it happening. Bears got lucky. Panic has set into the market. And if you don't know how to short, or if you don't know how to look at short plays, this is going to be hard for you. The whole buy the dip. If you're trying to buy the dip of options, it's just not going to work out for you long term. So just keep that in mind, guys. I don't want you guys blowing up your accounts. But we're going to go ahead and wrap up the show because we got a lot of selling to do. So
hey, real quick, look at, I know we're 2 minutes away. Look at ticker EDSA. Just give us a quick review of that one. That's the ticker I'm looking at this morning. I did a little scalp in the pre-market. There's good news on it, strong news, and I think that might be a possible bull play even on this red day.
All right, so just really quickly. Not really much for short interest on it. Shares outstanding 13.2 million. The float 7.8 million. What was the news on this one, Todd? Oh, so positive phase 2 data on something. Actually, yeah, I think this one has a history of going up like 22, if I'm not mistaken. Yeah. Okay, so we're up that much pre-market. This will be interesting, but at the same time, everybody's going to be bearish leaning. That's just how I see this one. Everybody's going to have just straight fear in the market that they're going to lose money, and so they're either going to take profits or they're going to just get the heck out. That's what I feel like is going to happen. So, all right, guys, we appreciate y'all tuning in today. Remember, the market is going to get wild right here. If you're not used to trading to the short side or looking at these charts, just don't trade with option contracts. That's all I got to say, because you will blow up your damn account. So other than that, I got some selling off to do here, and I appreciate y'all tuning in today. Y'all take care, trade safe, and we will see y'all in the next one.
Have a good day.